Hello, everybody. Hope you're doing well. So let's just take a look at the market here. So I think the market is going to continue to kind of work its way higher. The reason why I say that, well, there's a couple of reasons. Um, One of them is this, is our sentiment. So there's been a big jump in bearish sentiment and a big drop off in bullish sentiment over the last week. And that's actually good for the market because as long as people are bearish, there's money on the sidelines. The most bearish people were was over the last year in April, and 62% of people were bearish. That's twice the historical norm. And guess what? It was a great time to buy because the sellers had run out of shares to sell. And when the market runs out of sellers, it can only go up. So as long as people are still this bearish and this little bullish, I think the market's going to continue to go higher. Now, if one day we get a reading that all of a sudden 50% of investors are bullish and only 20% are bearish or whatever, then it's like that's when it's time to sell. Now, is that going to be next week or is it going to be in 3 months? I don't know. But it's going to happen sooner or later. But as of right now, I think the markets continue to look really good. A big part of this too, or I think a big catalyst or something that fuel to the fire is Apple. I mean, Apple was finally broken out. The three biggest stocks in the market are Apple, Microsoft, and Nvidia. Microsoft and Nvidia are basically trading at or close to all-time highs. Apple hasn't participated until now over the last couple months. You can see, we came back after the April sell-off, but then we just pretty much went sideways. But now Apple is back in gear. So if we look at the S&P, probably going to hit some resistance, maybe a little bit of profit taking right up around this former high, right around 640. So you can see we're almost there. This was the sell-off last Friday, which, I mean, if you listen to the media, they're like, oh, the job market is just crashing, blah, blah, blah. Those numbers were not that bad. And if if the economy really is bad, that can be bullish for the market because it means Fed interest rates are going to get cut. So that sell-off was down about 2.7%. The one we had in May was down about 3.2%. So this is a bigger sell-off. So I think things continue to look good. Let's look at our sectors. We'll start with the technology sector. Um, yeah, I don't know why I have this line there, but so getting a little close to resistance. But again, I think this will probably break through, especially now that Apple is in gear. All right, now after after tech, the next biggest sector is financials, and you can see here a really good example of some of our market principles. But financials look good. I mean, I don't think they look good, but they've held support. So this could be setting the stage for move higher. This is an example where the level that was resistance turns into support. People sell here, and at first they think, oh, this is easy when the market goes down. But then when their resistance breaks and the price goes higher, a lot of the people who sold say, I made a mistake. If I could buy my shares back at the same price I sold them at, I'm going to. So when the price returns to that level, remorseful sellers placing buy orders can form support. Now, up here, we can see a different phenomena that happens in the market. Resistance at a former resistance level. People buy here and the price goes down and they're like, oh, this sucks. If I can ever get out of break even, I will. So when it returns to their level, remorseful buyers placing sell orders turns resistance back into resistance. A big part of understanding trading is understanding how to identify these price levels and identify them, yes, but understanding why they form is really kind of the important thing. Because if you can understand why they form, it's easy to figure out where they are. All right, next biggest sector is our healthcare. Big massive sell-off in Eli Lilly. So, but now okay, so we can just see what we just saw in financials, resistance at a former resistance level. Now, this could be another catalyst to the market moving higher because this sector is oversold and it's at a support level. There tends to be support at levels that have been support before because of Seller's remorse is the mirror image to the resistance. People sell at the bottom, and when the price goes higher, they experience seller's remorse. So, like, I shouldn't have sold. If I could buy my shares back at the same price I sold them at, I'm going to. So, when the stock finally returns, or in this case, the ETF finally returns to that support level, remorseful sellers placing buy orders can make what was support become support again. Now, if this reverses and you got that Apple going up, right, there's some more fuel to the fire of the rally. Now, let's look at our industrial sector, which is kind of pretty much just going sideways, but it's held support. A lot of the action here has been because of the defense stocks, and I would imagine they're going to continue to do well. They're basically raising taxes in Europe so they can pay for defense, and that money is going right to these defense companies. This is the sector. Sorry, this is the industry, the defense and aerospace industry. Yeah, so this is going sideways, but I think sooner or later it'll get back in gear. This is probably just some normal profit taking. I mean, since the bottom, it's up 56%, in 4 months, which is pretty remarkable. Consumer discretionary. Let's look at that. I think we're kind of, I don't know, kind of neutral here. I don't really see much. Communication services. All right, this is something to watch. This is kind of just going sideways. But if this resistance breaks, that'll be another, more fuel to the fire of the rally, I guess I should say. Remember, as long as people are skeptical, I think the market's going to move ahead. It's when people start getting bullish, that's when you got to start thinking about selling. If that bullish number hits 50%, well, we can talk about it when it happens. But markets don't go up forever. All right, so this is kind of interesting. I'm going to be looking for ideas here in consumer staples. You can see we might be on the verge of our classic breakout. So resistance, which we talked about, resistance can stay intact because of buyer's remorse. Support can stay intact because of seller's remorse. But if you break resistance, and we have what we call a breakout, meaning you get above the resistance, it shows you that the people who created the resistance with their sell orders, be it investors or traders, are out of the way. They've canceled their orders or they finished orders. So if you take a large amount of supply off out of a market, then the stage is set for a move higher, because when buyers come in, they can't find sellers and they got to really jack the price up. So there's going to be some ideas here, I believe. And the biggest stock in this sector is now Walmart. For it was Procter and Gamble for years, but now there's Walmart. So Walmart is consolidating a little bit. This is probably poised to move higher too. Um, we looked for some trading ideas in our basic materials sector, which seems to be reversing, slowing down a little bit, but whatever, looks like we're trending higher. And then we got our real estate sector. Remember, different sectors are in the driver's seat at different times. Now, real estate, materials, utilities, energy, they're so small they don't affect the broader market, but the bigger sectors, they shift. Sometimes it's most important to watch energy. I mean, sorry, technology. Sometimes it's healthcare. Now we want to watch healthcare to see if it comes off of that bottom. Here's real estate, and once again, we could see resistance at a former resistance level. I would say this is pretty neutral. And utilities were on fire, and believe it or not, because utilities, well, I would say they actually are still on fire. And in a lot of ways, this is a crypto play because a lot of the electric utilities have just been going nuts. And yeah, so that's it. So anyway, everybody, just hope this helps. Remember, a lot of the performance of a stock comes from the performance of the sector that it's in. So it's possible to have a sector that's going down and a stock that goes up within it, but it's much easier to go with the tide. And we can see utilities are trending higher. We could see consumer staples are on the verge of a breakout. So there's going to be some trading ideas in these sectors, and we'll find them this week. And that's it, everyone. Hope you have a nice day, and I'll see you all soon.